technology has changed so much even in the last couple of years that you kind of just don't have the risk of having this car which could have different charging technology in 5 or 10 years. So people that have been in the market for leases have cited that as an advantage, and the types of deals that are out there that it's really hard to match on traditional cars at this point.
So I guess the question that I have is what demand looks like moving forward, Keith, because if we were talking a couple years ago, everybody would be thinking EVs 100% would be the way to go. But I think it was just last week we learned from Volvo that they're sort of ditching their timeline. Ford is completely throwing their timeline out the window here. What's the timeline for a transition to EVs? Is that something that you think will even happen?
Well, you know, it was at the beginning of the Biden administration, all the car makers were at the White House, and there was this big...
Except for Tesla, right?
Except for Tesla.
Yeah,
that's true.
But there's a lot of history. There's a lot of history.
Yeah, there's a lot of history there. But the other major automakers were all at the White House, and there was a big pronouncement that we were going to have 50% EVs by 2030 or zero emission cars by 2030. The pace of EV adoption probably doesn't get us there currently. EVs were just under 10% of the market in 2023. We'll see where they land in 2024. Leasing is a rare bright spot. EV leasing was 32% for EVs in the first quarter of this year, and it was 11%, I believe, for regular cars. So leasing has been a bright spot, and it could be the case that, you know, leasing allows people who are kind of skeptical about the technology to try it for a few years and decide if it's for them. So it remains to be seen whether we get to the types of numbers that were talked about in that White House event. But the car makers have not said that they're going to stop making EVs completely, and if for no other reason, then they want to sell cars in China.
This isn't really a question so much as a comment, but in defense of,
I'll allow it.
Of leasing, I mean, I like to lease cars, Keith, simply because I like getting a new car every couple of years. I like to try out different models.
You live in New York City.
I know, but I have a car. I drive, I have to drive, get to the horses, etc. I don't know, maybe that's a factor. That's my comment. It's not a question, Keith. I don't know if you want to do anything with it.
Well, yeah, leasing has its fans. It is a... it just depends on whether it makes sense for the type of factors you mentioned. It's a practicality consideration, and that's what we're finding a lot of people are basing their consideration of EVs on. There are people, you know, I talked to people for this story who were buying their second or third EV, and there are some people that say they don't trust the charging and they do a lot of, you know, long distance trips and don't want to.
Oh, sorry, go ahead, Keith.
No, it just kind of comes down to each individual car buyer, whether leasing makes sense for you or not. And in some cases, you know, I talked to a gentleman for this story who leased a Kia Niro, and he said he got a deal where he was paying $307 a month, and he started out trying to buy a Kia Niro, and the lease deal was just so good he couldn't pass it up. He said, you can't get anything for $300 a month these days.
We only have like 20 seconds left, but could it be better for some people to lease because there are concerns about battery life and battery degradation?
Yes, because you can. In that case, you could lease for as short as 2 or 3 years. You're not stuck with a car throughout in the years where you could have those type of problems if that's something you're concerned about.
Keith Lang, Bloomberg News automotive regulations reporter, joining us from our Washington, D.C. bureau. You can read his story about that $20 a month lease for that EV out there in Colorado at Bloomberg.com and on the Bloomberg
You know,
terminal.
you have a car too.
I do, yeah.
You're
It's
in
not
New
an
York
EV.
City, man. No.
I know.
Can't do that. Range anxiety.
I drive the car every week to park it.
Oh.
That's like, it's really terrible.
You shuffle it around?
Shuffle it around. That's the life of a New Yorker
Keep
with a
it
car.
fresh.
You're listening and watching Bloomberg Business Week. That's Katie Greifeld. I'm Tim Stenevec, and this is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go ahead of the closing bell. Right now we are looking at a loss in the Dow Jones Industrial Average, well off session lows, but still down 98 points, a decline right near of 0.4%, while NASDAQ is up 122 points. For the NASDAQ Composite Index, that is a gain of 0.7%. 10-year at 3.64% with a 2-year 3.60%. Gold up $9 the ounce, 25.15, a gain of 0.4%. And West Texas Intermediate crude down 3.9%, 66.06 a barrel. Brent right now 69.48. Brent crude down by 3.3%. A rally in the world's biggest tech companies lifting stocks, countering us from big bank executives that has sent financial shares tumbling. Case in point, right now we have got J.P. Morgan Chase down 5.1%, Citigroup down 2.4%, Goldman Sachs lower by 4.2%. The big event takes place tonight when we get the presidential debate coming up tonight. So what can we expect out of the debate, which you will hear live here on Bloomberg Radio? Katrina Dudley is investment strategist and portfolio manager at Franklin Templeton.
I think the election is going to be the front and center. So first of all, we have the presidential debate that's happening this evening. And in terms of expectations, this is really the first time that we get to hear from Kamala Harris as to what her policies are. How aligned are they with the Biden policies and how differentiated they are?
Franklin Templeton's Katrina Dudley. Our coverage begins at 8 o'clock. Special coverage, special edition of Balance of Power on Bloomberg Radio. Recapping, right now we have got the S&P up 21, a gain of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Certainly do appreciate that. I've got an important message for our listeners and our viewers out in San Francisco, because starting October 1st, the place to listen to us in the Bay Area is on the Bloomberg Business app. It works seamlessly in your car with Apple CarPlay and Android Auto. So make the switch today, because October 1st, Bloomberg Radio is streaming directly to your phone, the Bay Area's new home for Bloomberg Radio, the Bloomberg Business app. You can download it for free in the Apple App Store or on Google Play. Well, let's talk academics, because the gap between women and men in leadership roles at U.S. business schools has been shrinking, especially as more women are promoted to positions that are stepping stones to deanships. In 2023 to 2024, women deans at 368 U.S. business schools represented 30% of the total. That's according to research by the Association to Advanced Collegiate Schools of Business. It's an increase from 17% back in 2007 to 2008. What's more, the AACSB found women now account for 43% of associate business school deans. It's a position that often leads to a deanship. 34% currently in that role were once associate B school deans. For more, we've got a great roundtable. Dimitri Kasanides, she's Bloomberg News senior editor, and we've got Wen Mao with us. She's dean of the Villanova School of Business. They both join us here in the Bloomberg Interactive Brokers studio. Dimitri, I want to start with you, and I want you to set the scene for us, because each year you spend a lot of time focusing on business schools for Bloomberg Business Week. Take us into the gender gap when it comes to leadership at these schools.
Well, it's just like the numbers that you just mentioned. I mean, there's been a substantial gender gap, but we see it narrowing, and importantly so. I think you see it to some degree in a way with our guest today, with Dean Mao of Villanova, women who've been at these institutions for a while, who've been growing in different positions and moving their way up. And as we see more and more of those women sort of stepping into these associate deanships, you know, they're primed for taking on these roles. I think it's just the generation and the time that we're in, that it's all kind of coming together. There's still a gap. And even I think there's still a bit of a gap. I'm looking it up now, and I'll know that in a minute when I put my finger on it, when it comes to salary and some other differences. But it is meaningful. It's meaningful in many ways. It's as we reported in our story, Dean Mao was one of several deans that we reported on, to the women in that institution in various roles, to the women who go to those institutions and study. Representation, as we know, matters. And I think it's a very meaningful change also, just given the way that these institutions are led. There are differences. And so I think that it's something that we're gonna be happy to keep tracking in various ways.
Well, Dean Mao, come in on that point. Of course, you're dean of the Villanova School of Business. I actually went to school at Haverford, just 2 miles down the road. But you've been with Villanova in various roles since 1996, I believe. So what was the path to finally becoming dean of the business school?
Oh, it's pretty much my entire career. So I started as an assistant professor in the economics department, really 1 year out of the graduate program, and then became tenured at the business school, and then only because my colleagues wanted to hear me call Chairman Mao. So they said they waited for 10 years for that to happen. When they finally, they're like, yeah, we want her. I never actually wanted her because in academia, I think to this profession, at least most of us, I try not to realize, is the degree of freedom. You don't really have a boss. I mean, department chair really isn't a boss. Really, everybody is your boss. So like you're really not drawn to the salary, right? So it's really that freedom, it's that purpose, it's that working with young people, research, right, things that draw you there. So being an administrator isn't in people's plan. So, but
Dean Mao, I'm curious how the makeup of the school is representative or is not representative from a gender perspective of the actual administration.
In terms of, you know, the deans or
in terms of the deans, for example, and I can only draw on my points, but when my dad was in school in the 70s, it was almost all men. When I was in school, 8 or 10 years ago, it was 50, but 50-50 gender-wise.
Yeah, so if you count department chairs and deans and associate deans, right now, out of the 5 department chairs, we only have 1 female. She's actually the finance department chair, which has 6 of our students. Wow. So a very important job, and she's done a fantastic job at that. In terms of the dean's job, let's just zoom out a little bit for the whole university. We have 6 colleges, right? So 6 female at Villanova. So impressive. But if you think about history, right? Demetria is right that we have come a long way. It didn't just happen overnight. Looking at the hallway and see prior business school pictures, and I think I'm the 2nd female.
Wow.
Previous dean was the first female dean in Joyce Russell, and prior to that, all male, and most.
Wow.
That makes sense.
So that right. Yeah.
This is a Jesuit school.
But right now, we have associate deans and 1 male, 1 female. All right. So yeah.
So there you go, and that's the Villanova make that it's not something that you necessarily get into for the salary. Demetria, I want to come to you on that point. I mean, you think about data that you have, and what does that show when it comes to the salaries?
Yeah, well, I mean, we show from the association mentioned, and there's still a gap. I mean, the gap in salary has been somewhat, and it feels like over the last 5 to 8 years, it's about women lagging men in the dean's role 5 to 6 in salaries. So, if you're looking at, say, an average salary for male deans today of about $326,000 versus for females of 313.
It's not a huge disparity there, but there's still
not huge, but it's a disparity. And people, again, coming up in the ranks, long time with the institution, holding important roles. Sometimes you just scratch your head and wonder why there is a disparity at all still.
Hold on, why is college and graduate school so expensive?
Those they are big salaries, but they're big jobs. Maybe I don't know, Dean Mao.
In terms of the cost, it's very interesting you asked that. I think inflation adjusted, economist here, confession.
Please.
It go up as much as the sort of headline price tag says, because you also have right, and so net cost of a tech actually in recent years have gone down. So, but if you see the tag, it's like you go to the car dealer, one actually pays that tag price. You kind of have discounts, and so most universities give out discounts based on needs, and because that information is very hard to, isn't transparency to how much it is for most universities, believe it or not, are being pressed, squeezed. Right, on one hand, you're giving out, so you're not bringing in as much tuition. On the other hand, you have the rising with faculty salary and all that. Yeah.
I wanted to, we only have a couple minutes left, and I want to get into some of the challenges that schools are facing right now. The effect of the Supreme Court decision in the summer of 2023, affirmative action. How's this playing out at the business school?
Actually, we have not for this year yet, but preliminary data seem to suggest the numbers pretty much stabilized, so it didn't have a big impact for us. Maybe partly because we very strong outreach, and also if you think about it, MIT I think came out and said once that was a big, the number did go down for them, right, and I was thinking like just days ago, well, that has the school right below, right? So these students somewhere, where do they go, right? Be coming to some school, and maybe that impact on next year schools, and it trickles down to the following tier. So that's maybe just a educated guess, and for us, maybe it's a wash.
Dimitra, we only have, but as I mentioned, you said a very good part of your year focused on the business schools. I'm not going to give anything away because I don't know anything, but I know this time of year is when they usually come out. Can you give a preview of sort of things this year? Just very briefly.
I mean, we've been talking to deans at several schools, and going out there and taking a look at what's happening. The rankings come out up and just taking on greater importance. The AI, the theme of in the classroom, education, and also in the jobs that the graduates are seeking. And then jobs is a big one this year.
Okay.
It's been a challenging year for MBA grads. And
all right,
jobs.
well, we know
that has continued.
We know we'll get you back on as soon as that list does come out. Dimitra Kesanidis, Bloomberg News Senior Editor, Wen Mao, Dean of the Villanova School of Business, here in the studio. Next, we're driving to the close. This is Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 20 minutes to go ahead of the closing bell. The Dow lower right now, the S&P, NASDAQ, they are both advancing. NASDAQ 100 index higher as well. Russell 2000 index in the red. Right to the numbers, S&P up 20 ahead of the close here, up by 0.4%. 54.91 right now. We've got the Dow lower by 142, down by about 0.4%. NASDAQ up 133. That's a gain right now of just about 0.8%. 10-year at 3.64% with a 2-year that's yielding 3.60%. Gold up $8 the ounce to $25.14, up 0.3%. Crude, big story today. West Texas Intermediate slumping 3.7%. Now it's $66.14 a barrel. Brent trading below $70 a barrel. Brent crude down by 3.2%. A rally in the world's biggest companies lifting stocks, countering a slew of cautious comments from big bank executives that has financial shares tumbling. Right now, J.P. Morgan Chase lower by 5.3%. Among other bank stocks, Goldman down by 4.7%. Citigroup trading lower by 2.7%. Bank of America down by 0.3%. After the bell, we've got earnings from GameStop, also Dave & Buster's, and also Petco, ticker there, Woof, W-O-O-F. Recapping, S&P up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Would you look at the time, Katie?
Oh my God.
What do you see?
3:42.
3:42.
Could it be true that we're only 18 minutes away from the closing bell?
I think that is true. I think
Wow.
it's fair to say. How are markets looking? We just heard from Charlie.
You know, it's
What are you
okay.
thinking?
Again, we're not quite in we're so back territory, but the S&P 500, it's up 0.4%. Can't really complain there. You take a look at the NASDAQ 100 right now, your big tech names, we're up 0.9%. So some nice follow through on what we saw yesterday, following an absolutely punishing week last week.
Testing. It works?
It does.
It works. Okay.
Yeah.
Mic is on.
There you go.
I want to see what Amanda Agati has to say about this. She's Chief Investment Officer at PNC Asset Management Group. Amanda, I want to talk about the S word, seasonality, because September seasonality is something that we were reminded of last week with that huge decline in the well, I guess it's fair to say everything. Yeah, I was going to say the stocks, but how are you thinking about this, Amanda?
Well, it's great to be with you both. I would just simply say it's a sign of the times. And yes, that is a Harry Styles reference for you.
There it is.
We're hunkering down here for what we think is, likely to be a pretty seasonally average yet challenging environment for investors. September is a tough month, and we started off from a very tough perspective. I think it's really a function, though, of there's a lot of news and a lot of data points yet to come here. Investors have had it really easy for the better part of the year up to this point. We're sitting at price to perfection equity levels. There's just not a lot of headroom to absorb, potentially some negative data points here. So things are getting choppy, and I think it's right on cue with the sign of the times.
I'm trying to think frantically of another Harry Styles reference, and all I have to say is "As It Was" is a good song.
That's a great song.
Yeah, right?
Yeah.
It was my COVID song. I listened to it a lot while I had COVID the first time. Anyway, Amanda, I'm going to ask you a question that I asked one of our guests on the morning show, and that is, you think about just the cadence of this week. Of course, tonight we have the presidential debate between Kamala Harris and Donald Trump, potentially the only debate between the two this cycle. And then we have, of course, CPI coming out tomorrow morning. What do you think is more important for markets at this juncture? What will you be paying more attention to?
Well, I think CPI is certainly much more important than the debate tonight. I'm not sure that we're really going to get a lot of hard-hitting market intel that's necessarily going to drive markets forward here based on what we hear tonight. Obviously, policy differentials on either side of the aisle are going to matter going forward, but I don't think there's going to be enough clarity tonight to move markets materially. CPI is obviously a critically important one. It's a key input into what the Fed might ultimately do, but I'm not sure the investors are really even that focused on CPI. I think they're craving the watermelon sugar high from a rate cut coming next week. So I think that's probably really much more where the markets and investors' minds are.
You're on fire. You're just putting me to shame.
That's how she rolls.
I can't think of a single reference right now.
It's just luck today.
I am really interested that you said that you're more focused on CPI, because I asked Katrina Dudley that question this morning, and she's actually more interested in the debate from sort of the investment perspective to see actually how similar their policies are when it comes to, you know, some of the economic proposals. Of course, there is a lot of distance when it comes to other issues, but I mean, how much as a medium long-term investor do you pay attention to their policies? Of course, we talk about the Trump trade, the Harris trade all the time, but what does the Trump investment look like versus the Harris investment, if that makes sense?
Well, I feel like it's a little bit early to say. I mean, we can lean on sort of the traditional policy stance for the Republican Party and certainly for the Democrats, but I don't know that we have enough information, even at this late stage of the election cycle, to know for sure what the nuances and differences are. I mean, I think the debate will be very interesting. It's always entertaining to watch how these things play out. But from our perspective, what matters more is the makeup of control in Washington. And so we're not going to know that as a function of tonight. There's a lot of seats up for grabs. And so, you know, it's not going to be until we really get to the election itself where we have, you know, a lot more clarity around what policies might actually get implemented or not. Markets always prefer gridlock. Markets always prefer not a lot of policy change. And so I think that's the best kind of scenario, gridlock for the markets. But if I had to point to one thing that I care about more than anything else from a policy stance, is what happens to corporate tax rates. And so if we get some intel on that tonight, that'll be great. But I think there's a lot more to come on that topic.
Do you think, apart from the makeup of Congress and the presidency, the idea that gridlock is good for investors, how do you characterize election risk?
We don't tend to focus on it as material news, which sounds like a crazy thing to say, but I think from a market perspective, it's actually noise. It creates a lot of noise. It creates a lot of short-term volatility, but we do not position portfolios around binary outcomes. And this is really one of those where it's one way or the other. And so, you know, we're trying to position portfolios so that they have ballast, because this volatility story is very much picking up again. But going into the election, we're also very well diversified and very focused on quality, because it is at this point anybody's guess in terms of what the policies are ultimately going to look like. So that's sort of our defensive, offensive playbook at the moment going into the election.
Well, a minute left. What does quality mean in that environment? What are the characteristics of a quality company? And is that just big tech? Because that has been the definition for a while.
I don't know any Harry Styles songs, but there was no reference in there to Harry Styles.
No,
right?
he has a song.
I don't know. I've used up
Big
all my I've used up all my
companies.
references, so I can't give you another one there. But from a quality perspective, we're definitely focused on high recurring revenue bases, strong defendable margins. We're in a margin compression environment now, so those who have the ability to pull levers to defend margins, we view as very much quality. Throwing off a ton of cash, low debt burdens, low leverage. Those are kind of the key characteristics around quality. Certainly some of the big tech names fit that, but there's a lot more diverse options out there than just big tech.
Amanda Agati, always bringing the references, the song of the season. You guys do the song, you do the song of the season or something, right, Amanda? Is that what it is?
We do every year. I have a Rolling Stones t-shirt on. You can't quite see it today, but our song of the year for this year was I Can't Get No Satisfaction by the Rolling Stones.
Do you have it 10 seconds? Do you have it picked out for next year yet?
No, oh my gosh. And if I did, I would not reveal it yet. You'll have to have me back closer to the end of the year.
Hey, we're going to have you back closer to the end of the year, of course, because you do the 12. Is it the 12 days of Christmas?
There are 12 days.
Yeah.
For Christmas.
Yeah. We always get Amanda Agati around Christmas, Chief Investment Officer at PNC Asset Management Group, joining us from Pennsylvania. Coming up next, It's our countdown to the close. Beyond the bell, the closing bell. This is Bloomberg.
Listening to Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Katie Greifeld, in for Carol Masser from Bloomberg TV and Bloomberg Radio. Also has a podcast.
I do. Thank you.
You and Matt Levine.
Yeah.
The Money Stuff podcast.
Yeah. It's actually,
I still think it's new, but it's been around since April.
Yeah, it's really good, actually.
Says the person who does the podcast.
No, it's super good. We have a lot of fun. Actually, we're doing something fun this week.
Ooh,
so
tell us all about it.
I'm off next week.
Okay.
I don't know how many times I'm going to tell you that.
The whole week?
The whole week. So we're not going to record usually we record on Thursdays, ship the podcast out on Friday. Obviously, I'm not doing that next week. So we did a call out in last week's podcast to please send us questions.
Okay.
So we're going to record a regular podcast next week, and then wait, no. We're going to record a regular podcast on Thursday.
Are you making this up?
No. And then we're going to record a mailbag episode where we just answer questions, and that'll come out next Friday. So there's still time.
It's a good tactic.
Yeah, there's still time to send us questions to Matt Levine and I. Our producer asked us, what kind of questions do you like? And
what kind of questions do you like?
We said, we love talking about ourselves. So please send us questions about ourselves or anything else. moneypod@bloomberg.net is the email. I'll say it again. moneypod@bloomberg.net.
Okay,
Yeah.
so there it is, moneypod@bloomberg.net.
Have you actually listened?
Great, yes, of course.
No, you
so
haven't.
I'm a listener, I'm a subscriber.
You're so full of it.
I love it.
Okay.
I've given it 5 stars.
What did we talk about last week?
Money and stuff.
You're so right.
Hey, let's talk about Nike.
Okay.
Because one of the most read stories on the Bloomberg terminal is about how the company is actually skipping its annual Just Do It Day.
Mm-hmm.
What's going on there?
So usually they have the celebration at their headquarters in Oregon, which I haven't been to, but I would love to because they have a track, a 400-meter track in the woods.
I went there.
Really?
Yeah.
Why?
I had friends who worked there years ago.
Wow.
One of them still does. They were getting married. And on the day of the wedding, he took us all to the employee Nike store.
That's so cool.
It was so cool. I bought a bunch of shoes that ended up not fitting me.
Yeah, well, not enough people are buying shoes. Nike has had a really tough year. You take a look at the share price. It's down year to date 27%. So Nike is having a bad year, and we've known that for a while. So in that context, this news is interesting. This is according to people familiar with the matter. They're skipping that celebration, the big Just Do It Day, choosing instead to host smaller festivals for its employees at its offices around the world. Part of the reason they're doing this though, scaling back a little bit, is because they had such a huge presence at the Olympics. I don't know if I've mentioned it. I was there.
Did you see
awesome.
Nike there?
Oh yeah, they were out in full force.
Here's the thing: it's not. This is part of the problem that the challenge that Nike faces. They're not the only game in town these days.
Yeah.
And they haven't been for years. But I mean, you had that analyst about a year ago who went to Central Park to see what people were running in, and people were running in Rokas and On and stuff like that. And there are concerns about market share.
Yeah, no, they're real. I mean, I run in Hokas. A lot of my running friends, a lot of people will use Nikes for their race shoes, but your general trading shoes, Nike has definitely lost market share and mind share there.
I mean, fair to say they invented a category.
Oh,
Phil
definitely.
Knight.
So, I mean, Nike's legacy, I mean, their heart and soul is track. And they invented really the super shoe. They have led the way there. Like at the professional stage, when it comes to sponsorships and what the top runners are wearing, they're largely in Nikes. It's just the casual running community is where a lot of people say they need to get their mojo back.
There are only so many professional runners who are.
That's true. But that's why the Olympics is so big, because you can deck people out, your athletes out in your Nike shoes. And also all of at least the track and field uniforms, at least for the U.S., were all Nike as well. So it's a great branding opportunity.
Nike shares down 1.7% right now, down about 28% so far this year.
Yeah.
Emblematic of the struggles there. The company does report earnings, though, at the beginning of next month, 10/1. So
mark your calendars.
Mark your calendars for that. Also mark your calendars because the market's about to close, and we're heading on over to our TV team for our cross-platform coverage. It's on radio, TV, YouTube, and Bloomberg Originals. We're going to count you down to the close on this Tuesday afternoon. It's a market that looks a little mixed. The S&P's up, the Dow down, NASDAQ higher. Beyond the Bell starts now.
A full breakdown of all the market action coming up right now, right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Teal, taking you to the Closing Bell, a global simulcast. It starts right now. Scarlett Fu in the television studio, Tim Stenovic in the radio booth, Katie Greifeld along his side, filling in today for Carol Masser. Welcome in to all of our audiences from all of our platforms, including our partnership with YouTube. Tim Stenovic, a mixed day here in markets. What do you make of it?
I'm really watching what's going on with the banks. I know Katie's going to be talking about some of those at length, but the KBW Bank Index down 1.9% right now. We're hearing from a lot of banks that are at the Barclays conference. They do this each year, and it seems like they're really tempering expectations or managing expectations about what's to come when we start to hear from them in the most recent quarter in, gosh, just about a month.
Yeah, it'll be interesting to see what we actually hear from them and whether they're under-promising now to over-deliver. We'll get into that as well. It's interesting that we have so many risk events loaded up between now and 8:30 a.m. tomorrow morning. The debate, of course, inflation numbers, things are getting excited again, even though, you think about the markets today, not too much action.
Yeah, not to mention NVIDIA's Jensen Huang speaking with the Goldman Sachs' David Solomon tomorrow, and I'm sure top of mind for a lot of people is what's going on with Blackwell and the manufacturing delays that we've seen with that chip.
I don't know. I think you guys are overselling it. I think you're going to get the debate, sure, but then with CPI tomorrow at 8:30, is that really going to resolve the debate of 25 or 50 that will give direction to the markets? Come on.
All right. Well, we're going to find out here, and I guess investors, and maybe that's part of the problem is it's kind of like investors just have so much that they could focus on, and the question is, what do you pick and choose? A mixed day here on Wall Street as we get the closing numbers here in New York. The Dow Jones Industrial Average lower by more than 80 points, roughly about 0.2%. We wait for these numbers to settle, but it looks like it's going to be a down day for that index. The S&P 500, despite all the turmoil, despite all the hand-wringing, it's actually 2 straight days of gains, a 24% gain, 24-point gain on the day, up about 0.5%. The NASDAQ up about 0.8%. The Russell 2000 actually tried to get a bid here going into the close. It looks like it's going to finish in the green. We're going to call it unchanged. It's down less than 1 point on the day.
Well, taking a deeper look at the S&P 500, you had more stocks advance than decline. Not surprising, given that the index did move higher today. 263 stocks moving higher, 236 moving lower.
You know, I was just counting, and the S&P 500 changed direction 6 times, at least 6 times today, although in the last 2.5 hours, it's been on a steady upward trajectory. And that's what you see in the sector performances as well. A lot of green there, led by REITs, led by consumer discretionary companies, and led by tech. All 3 of those groups up at least 1%. But the weak links are pretty weak. Energy stocks off by 1.9% as Brent crude falls below $70 a barrel. And financials, as you guys mentioned, losing 1% on the day.
All right, well, let's take a look at some of the
Tracy
stocks.
Alloway bought like a barrel of oil or something and kept it in her bathtub.
Yes, I do remember
Yes,
this.
that was
It was very cool.
Tracy Alloway.
Tracy Alloway of Odd Lot. She bought like a small little barrel. It wasn't a full barrel, but she kept it in her bathtub.
Still counts.
Yeah.
Is that allowed in like apartment buildings?
I don't think so.
I feel like
I mean, it's probably pretty small.
such a New York problem, right? No oil allowed. That's in the bylaws. Hey, let's take a look at what happened to some of the gainers today. Oracle higher by 11.4%. They actually had a record shares after the company reported profit and booking that topped estimates. AI demand continues to boost its cloud computing business. Remember, Oracle has been focused on expanding that cloud infrastructure. They rent computer power. They compete with Amazon, Microsoft, Google. They've developed a reputation for success with Gen AI workloads. The company touted customers including Elon Musk's xAI. And speaking of Elon Musk, Tesla, another one of the gainers today. Shares finishing higher. This after Deutsche Bank resumed coverage of U.S. autos and auto tech sector. They named Tesla its top pick. They said the company is in a, quote, league of its own and represents our highest conviction secular leader, poised to reshape multiple industries across auto, energy, mobility, and robotics. Shares of Tesla higher by 4.6% today. I want to do a fun, sweet one.
What's
to
that?
end the day. Tootsie Roll Industries.
Oh.
Yeah.
Okay.
TRUS.
Yeah, I always forget they're publicly traded.
Me
Yeah,
too.
market
Their
cap.
candy's gross.
Excuse me?
Sorry.
What?
Excuse me?
Tootsie Rolls are disgusting.
Nah, disagree.
Okay, I think the 69 boys disagree with you as well. So.
The stock, the best performer among its peers, finishing higher today by 3.2%. No fundamental news I could find. Shares flat.
Thank you for that. I love Tootsie Rolls.
But a fun one to end on.
What's the
What? But
market
you don't
cap?
like chocolate.
It's like
This
$2
is not
billion.
chocolate.
It's fudge.
It's real
believe.
chocolate?
Yeah.
No, that's the point. All right, now this all makes sense. Katie.
All right, it's my turn. Let's get to the bad news. Let's get to J.P. Morgan, of course. We all know the story there. We had President Daniel Pinto come out and say that analysts are being too optimistic in projecting next year's expenses and net interest income. Of course, he was one of, it feels like several banks, Goldman included, sort of tempering the outlook here. J.P. Morgan shares finishing about 5% lower on the day. At one point, it was 7.5%, which was one of its worst days since, I think, June 2020. So finishing off those levels, but still down about 5%. The next one, we have to talk about Hewlett-Packard Enterprise. Of course, HPE shares falling quite significantly. It's a boring reason, of course. They said yesterday that they had commenced a convertible preferred stock offering. You can see that investors clearly not too psyched about that. Hewlett-Packard shares really taking a dive there. And then I wanted to finish, of course, with Exxon. Scarlett was talking about how energy stocks were some of your worst performers today, and Exxon was no exception. You take a look at how shares finished up, down about 3.6%.
What's the difference between fudge and chocolate?
I couldn't tell you.
That is
No
a
idea.
great question. No,
Need a chocolate
is it
tier
more
here.
condensed milk versus something else? Hang tight.
I know,
on
do
this,
yields,
all right?
and I'm going to Google this.
I'm going
while
to
you're
decay.
doing
That's a
that.
good
Yeah,
distinction.
sure.
All right, let's go to bonds for a second. You saw a bid pretty much all across the curve. You have 2-year yield down by about 7 basis points. You had a 3-year auction that actually went pretty smoothly. The demand was pretty solid. And then tomorrow you get $39 billion worth of tenure, and then you get a 30-year later on in the week of $22 billion. So clearly that bond bull is still very much alive and well today. And
fudge,
Yes.
according to Google,
Uh-huh.
fudge is not the same as chocolate, but it can often contain chocolate. It's made from sugar, dairy, and flavorings, and is cooked cool.
Was this an
and
AI
smooth.
answer?
Say it's more similar to caramel. Yes, it's AI, so it's probably wrong.
This
But
is why I don't like
nevertheless, nevertheless, that's what the
I like
little
flavorings. That's
internet
really
box. Yeah.
vague and specific, you know.
Flavorings. I love
Specific
some
for
flavorings.
our purposes.
But I will eat fudge, but I won't eat a Tootsie Roll. Just throwing that out there for a new distinction.
Learning a lot about all of us, mostly Alex. I don't like chocolate.
Are we still getting earnings?
Yeah.
We are still getting earnings. Have you ever been to
Wow.
a Dave & Buster's, Tim?
All right, yeah, ticker PLAY. Earnings pulling up here
love that
on
ticker.
the Bloomberg terminal. Second quarter adjusted earnings per share beats estimates. Second quarter entertainment revenue coming in above estimates at $375.7 million. Second quarter adjusted earnings per share coming in way higher than estimates at $1.12. Dave & Buster's second quarter EPS also coming in above estimates. Shares bouncing around, but up 5.6, well, 7%. As we speak right now.
All right, let's get over to Petco. The ticker there is WOOF, of course. It's where the pet goes. Shares are moving higher right now because they reported net sales for the second quarter that meet expectations. Net sales coming in at $1.52 billion. The estimate was for $1.53 billion, but this is interesting. The adjusted loss per share in the second quarter came in at 2 cents. That is slightly better than what analysts had been looking for, about 2.3 cents. And they look forward there to the third quarter adjusted loss per share of 3 cents to 4 cents. 3.1 cents is what the estimate had been. So you add it all together and shares moving firmly higher right now.
All right, let's take a look at GameStop earnings. And, you know, when we say earnings, we kind of quote marks around it. Adjusted EPS of 4 cents. I'm not sure what that compares with, but let's look at the revenue line. Second quarter hardware and accessories net sales missing the average analyst estimate. That was about $451 million, down 24% versus last year. Analysts were looking for $477 million, so that's a big miss. Net sales overall down about 31%. Software net sales also down about 48%. Yeah, within the revenue line, everything is down year on year.
Yeah, I was going to say, you know, I was looking through the press release to see any color. There's no color. It's just numbers and bye-bye. There is no conference call today. And this goes on. Michael Pachter over at Wedbush said that this company continues to face a, quote, near insurmountable barrier to its planned return to growth. And clearly these numbers with those declines year on year aren't helping it any.
Yeah, well, planned return to growth. I mean, you have to put that in quotation marks because, I mean, what's the plan here? I mean, 31% drop in revenue and even that collectible side, which was actually one of the few bright spots that they had in past quarters, being that down also 18% here. There's just negative signs in front of everything.
Yep.
What are you doing, Scarlett?
What am I doing?
Just looking at the difference between fudge and chocolate.
I'm just thinking, when was the last time I was in a GameStop? I mean, I go with my kids, but like, you just kind of look at it, the store shelves are really bare, and then you move on.
Yeah.
I don't know what they're set to do with this turnaround that has been years in the making that has yet to materialize.
Is there not another roaring kitty tweet that
Well,
can save
to
this
Katie's
stock?
point in the chat,
Yeah.
she does point out that the stock is up almost 34% year to date. Thank you so much, meme stocks.
Yeah, you're outperforming if you are in a single stock portfolio of just GameStop.
All right, that's got to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We're going to be back tomorrow, same time, same place. Katie and I are going back to radio, YouTube, and Originals. Alex is heading out. Scarlett and Romaine are staying there on TV. We'll see you guys tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. That's Katie Greifeld in for Carol Masser this afternoon. I'm Tim Stenevec. And Katie,
Yeah.
one of our guests, the Dean Mao, came in here and asked how long we'd been co-hosting together.
This is a sad story.
And it's fun. You laugh because it's always good to laugh.
Yeah, otherwise you cry.
And the reason you're laughing is because we have a long history of doing other shows. You're filling in for Carol now, but we have a long history of doing other shows.
Other shows that have been canceled. We used to have a daily streaming show, Quick Take Stock.
Yeah.
Rest in peace. Then we had a crypto show together.
We had a crypto show.
A weekly crypto show. What a blaze of glory.
Crypto IRL?
Yeah.
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 It was a great show.
It was a great show. What a weird time, though, to have a crypto show. We had it, of course, one of the events that happened was FTX collapsed. So that was interesting to cover in real time.
It was the crypto winter.
Yeah. Well, it was the start of it.
The start of it, yeah.
For a while, it was the crypto summer. It was like crypto on the sun.
Well, that's kind of a perfect segue to get to our next guest. Adam Sullivan is the CEO of Core Scientific. The ticker is CORZ. And the reason why I say that's the perfect segue is because this is a company that's intimately familiar with the ups and downs of the industry. At one point, it was the largest public Bitcoin mining company by computing power, but it went bankrupt back in December of 2022. It's now emerged from bankruptcy. It's back listed publicly again, but the company's going for something a little different right now. Adam, welcome to Bloomberg Business Week. How are you?
Doing very well. Thank you for having me on.
You still are doing Bitcoin mining, but you're looking more at the computing power to do other stuff right now.
You're absolutely right. So we're a digital infrastructure company at heart. We've developed 800 megawatts of infrastructure. That allowed us to be the largest Bitcoin mining company for the past 3 years. And now we're utilizing that infrastructure to be one of the largest data center companies in North America.
Talk to us about the bankruptcy process and sort of what you were able to do with the fresh start.
Yeah, it was a pretty tumultuous process, right? I came into the company about 4 months into the bankruptcy process, and there was a big fight over the valuation of the company because Bitcoin is volatile, Bitcoin mining returns are volatile, so the valuation of the company that you have to set 4 months before you come out of the bankruptcy process is challenging. And so we came out with a very unique capital structure that we've now solved for. We solved for it last August, or this previous month. And we've been able to clean up all of the litigation, all of our balance sheet, and put ourselves in a really strong position to execute on the high-performance computing play that we have in front of us now.
Can we talk a little bit more about Bitcoin mining and data centers? Because, not to quote Harry Styles again, but it is a real sign of the times here. Yeah. And it's interesting. It sort of feels like how Facebook became Meta, but now they're really in an AI company, and Meta is sort of an afterthought. I mean, how do you identify as a business? Are you a Bitcoin miner? Is that how you introduce yourself, or do you introduce yourself first with the data centers?
We're a digital infrastructure company, and so what we develop is very application-specific data centers. We've been developing them for Bitcoin mining facilities for the past 7 years, and now we're developing them now specifically for high-performance computing for artificial intelligence.
Why make that change?
Well, artificial intelligence and high-performance computing provides us with long, steady contracts with large counterparties. So we just signed 12-year contracts that total more than $6.7 billion in revenue over the next 12 years. So it really takes away the volatility and provides us the opportunity to make counter-cyclical investments into Bitcoin mining.
How much of your revenue now comes from Bitcoin mining?
Nearly all of it does today. And so
even though you signed this contract
Yeah,
already?
these contracts are for delivery in 2025 and 2026.
So what's the ultimate goal in terms of portion of revenue from Bitcoin mining versus high performance computing?
Yeah, so
if you can have that distinction.
Yeah. Well, we'll be developing these sites over the course of 2025 and 2026. So as we look forward to 2025, it's going to be a lot of high-performance computing revenue. But as we look at 2026, 2027, it's going to be much more heavily weighted towards the traditional data center revenue.
I want to talk a little bit more about the mining piece in particular. Remind me when the last halving was.
It was in April of this year.
It was in April of this year. That feels like a year ago. So it was in April of this year. I mean, how do you handle the halving as a miner? Of course, for those listening who aren't super acquainted with the language, of course, the halving is basically when you have to solve a lot of puzzles and computer problems, and then you get Bitcoin as a reward as a miner, and then that reward is cut in half every 4 years. I mean, how does that actually impact your business? We talk about it all the times in terms of the price impact, but from a revenue standpoint, how do you handle that?
Yeah, so the expectation is that when block reward gets cut in half, difficulty drops, or how hard it is to find a block. In this previous halving, difficulty did not really fall off. And so mining revenue did get cut almost nearly in half in April in a single day. And so what we saw over Q2 was much more challenged mining economics. And we handle it a little bit differently than other companies because we developed our own software stack. We're able to have much more flexible energy contracts with our end providers. And so that provided us an opportunity to actually have our costs only increase 60% post-halving, whereas what you saw in the broader market, generally speaking, about 100% increase in cost to mine.
That's really interesting. And I mean, Bitcoin, the actual price itself has been interesting in that it's been really boring. I feel like we've been hovering around $60,000 since basically the end of February. What's the current?
It's like the ETF after the ETFs.
Yeah,
right?
we got the ETFs, and then we go up, we go down, but really we're in the neighborhood of $60,000. What is the current break-even level when it comes to Bitcoin price?
Yeah, so for us, we announced in Q2 our break-even Bitcoin price was about $29,000.
So you're having a great time.
Yeah, so we're still...
As long as the price is above 29,000, right?
Well, the expectation is if Bitcoin price fell, you'd see difficulty come off the network or network hash rate drop. And so you expect the break-even price to then drop in tandem with that.
I'm wondering about the infrastructure that you own and how easy it is to switch that from Bitcoin mining to high-performance computing. Is it impossible?
No, but it's not easy. It takes a very talented team. So much of our team comes from the traditional data center industry. And so the way our facilities were originally constructed was with the idea in mind that we're going to be able to convert some of these facilities to traditional data centers in the future. So our facilities look much more like powered shells with the opportunity to convert it based on the end specifications of the user.
You mentioned flexibility when it comes to power costs. This is a huge determinant in how profitable a Bitcoin miner is, because it is the main determinant.
Yep.
What do you do for power?
We're entirely on grid, but we participate in multiple different load programs that provide, it gives us downtime of depending on the time of year, but it's a significant reduction in power costs.
What are the politics there? Because I remember with a lot of the Bitcoin miners, something that we explored in Crypto IRL, rest in peace, was of course that the miners came under a lot of fire for the electricity usage. It feels like data centers haven't quite experienced that same criticism, probably because I feel like as a society, we're all interested and excited about the possibilities of AI. What are your thoughts there?
Yeah, I think both data centers and Bitcoin miners have been under fire. Data centers were under fire prior to the Bitcoin miners being under fire. But I think where we sit today is a lot more states and a lot more regulatory bodies are starting to understand the benefits of Bitcoin mining. And so it's actually provided a big opening for utilities, because utilities have to count data center demand against peak demand, but Bitcoin miners do not count against that peak demand.
We only have 30 seconds left, but make the case for the benefits. People might be listening and say, wait a second, the benefits of Bitcoin mining, like, I don't care about it. I don't see any benefits. What are the benefits?
The benefits allow new generation to come online, even if it's not economic to run 100% of the time. Bitcoin miners can take that base load so that in the 5 to 10% or 20% of when that power is actually needed, that can be supplied back to the grid, while the Bitcoin miners are paying for the power the rest of the time.
Adam, good to see you.
Good to see you as
Thanks for joining us on Bloomberg Business Week. Adam Sullivan is CEO of Core Scientific. CORZ is the ticker. He's here in the Bloomberg Interactive Brokers studio. Taking a look at the way markets closed, Katie, up for the NASDAQ and the S&P 500, the Dow, which I know you care very closely about, down 0.2%.
The Russell 2000, which I do care about, pretty much flat on the day. It's interesting, though. You think about the debate, you think about CPI. There's a lot to look forward to.
CRYP Go on the Bloomberg terminal is how to access crypto prices. Bitcoin up by 1.3%, just shy of $58,000.
4:21 on Wall Street. We do check markets all day long. At Bloomberg, turned out to be an up-day, choppy session, but nonetheless an up-day for the S&P 500 index, advancing 0.5% higher by 24 points. S&P wrapping up the Tuesday session pre-debate, pre-CPI at 54.95. Dow Industrials down 92, a drop today of just about 0.2%. The Nasdaq Composite Index up 141, up by about 0.8%. 10-year 3.64%, with the 2-year that's yielding 3.59%. Gold up 0.4%, 25.16 the ounce, up $9.50. West Texas Intermediate crude slumped 3.6%, 66.26 a barrel on WTI. Brent tumbling below $70 a barrel, 69.60 for the benchmark, the global benchmark, down 3.1%. Earnings after the bell include Petco. It forecasts an adjusted loss per share for the third quarter of 3 to 4 cents. After ours, though, we've got Petco up by just about 4%. GameStop also reporting earnings after the close of trading. Little changed. It reported net sales for the second quarter that missed the average analyst estimates. And then finally, Dave & Buster's, the ticker on the stock, Play, P-L-A-Y. It reported adjusted EPS for the second quarter that beat the average analyst estimate. After ours right now, Dave & Buster's up by 6.8%. Again, recapping, turned out to be an up day for the S&P, advancing 24 points, up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks, Charlie. Do appreciate that Bloomberg Business Flash. Well, our next guest spent more than 30 years at AT&T. She ultimately rose to become the CEO of AT&T Business. She was the first woman of color CEO in the company's history. Now, she's on the boards of 3M, CSX, and Franklin Covey. She's a senior fellow and adjunct professor at Northwestern's Kellogg School of Management. Oh, and she's got a brand new book out. It's called Lead Bigger, The Transformative Power of Inclusion. Pleased to have with us Ann Chow here in our Bloomberg Interactive Brokers studio. Ann, how are you? Welcome.
Thank you so much, Tim. It's great to be here with you.
Hey, we got a great big chunk of time, so we're going to get to the book in a few minutes, but we'd be remiss after more than 30 years in the telecom business if we didn't talk a little bit about what's going on out there, because it's kind of wild with the news that you have Verizon last week announcing a deal for Frontier, sort of getting more into the broadband space. This deal was a little surprising to me because I thought wireless was really the future that these companies are going for. Fiber is so expensive to install, to maintain, to get a tech out there to help you hook it up to your home. What's going on out there?
Yeah, so Tim, as you know, I've been out of the industry for a couple of years, right?
Yeah, a couple of years, but I'm sure you still follow it a little bit, right?
A little bit. But what I would say is that, convergence is really where it's at. As you think about the wireless network and wireless capabilities, yes, I mean, that's critical to the functioning of society. But ultimately, all comes down to a fiber network, comes down to a wired network as part of that infrastructure. So that's what I think, we're seeing out there, is that coming together. And I'd love an opportunity to talk about just leadership in general and inclusion.
Oh yeah, we're gonna we got a lot of time. We're gonna get to that. But I thought that with how expensive fiber is and with the advancements that we've made in wireless, moving forward, we'd see more wireless nodes than people digging fiber. Are you saying that we're still going to be having fiber coming into homes and businesses and not going to be going wireless?
Yeah, what I'm saying is that the way that networks will continue to evolve, as they always have, will be based on the latest technologies, right, and the demands of the marketplace, right? Certainly with the needs for storage and the high capacity computing and the emergence of AI, there will always be a need for networks and high capacity, high powered, fast networks. And so all I'm saying is that as the technology evolves, that's where it will be, right? And ultimately, if you look at any network, right, a mobile network, it includes stuff in the ground, right? It includes wired capabilities. That's all I'm saying. And I'm sure you could have plenty of other experts who could talk about costs in a much more specific way than I could.
Well, I am curious to talk a little bit more about AI. Yeah. AI is in every conversation. We talk about it all the time, how it relates to different industries, of course. Mostly, we talk about it in terms of the chip makers and sort of the picks and shovels right now, maybe a little bit with the iPhone, given what we heard yesterday. How do you think it'll affect AT&T and the industry, of course, that they sit in?
Yeah, so Katie, I wouldn't say that I'm the expert in AI.
Right.
as
Just
it relates
broad
to,
brushstrokes.
Yeah, so I mean, I can talk about what I think about
Yeah.
AI and how it will impact the need to be even more inclusive, if you will, right? And so what AI does, it helps us and gives us as humans, as leaders, the opportunity to actually advance our human skills, right? Which means that because AI will help us with more basic computing tasks, help elevate our intelligence, no pun intended, we as leaders have now got to figure out what are the kinds of skill sets we need to develop in our people, what kind of talent we need to complement and utilize those tools that are now just simply emerging across every industry and every business in a way. So the actual calling for bigger leadership is more important now today than it has ever been.
Do you think about, I'm just thinking about like how many things around our home we plug in and charge and are connected to the network. Is that, do we see, you talk about convergence, do we see more and more individual items connected to the network? The Apple Watch, for example.
I mean, I'm wearing a Garmin.
You're wearing a Garmin, but I'm pointing at you because you do have somewhat of a smartwatch, but that's not connected to the network. That's like connected to your phone, right?
Yeah.
Yeah, you can get the Apple Watch connected to the network. You're paying more for each additional device that you add on. Or are we going to see a convergence within hardware, and we're going to see fewer devices but doing more?
Yeah, again, I'm not a hardware expert, but what I do believe will happen is, right, there is more, and this is really what AI and computing is all about. It's about the data. It's about the intelligence, right? So as we see a more need for data, whether that's in how healthcare evolves, right, the watch, fitness, and health monitoring, or in other aspects of, monitoring your water levels or your utilities. These are all things where if more data is more helpful to us as a society, that innovation will occur, right? There will be more connected things, and that will help generate, more need for data, more need for computing, and more need for connectivity.
Okay, so how do you make sense of all this data that is out there?
How do I make sense of it?
Yeah, I mean, how does a company make sense of all this data? How does a leader make sense of all this data? Because if you think about everything that's monitored today, you have so many inputs. I mean, you could probably, as the CEO of a company, have an understanding of when people are badging in, when people are badging out, when they're more engaged, when they're not engaged. A lot of this has to do with how you create a workforce that is aligned with what you want to accomplish.
Yeah, absolutely right. Right, and so the first part of bigger leadership, of inclusive leadership, and let me first say what is inclusive leadership. It is simply, and leading bigger is simply about widening your perspective to have greater performance and impact. That's all that is, right? But the part of that widening of your perspective is being able to handle and process, even yourself as a human, more data sources, right? Surround yourself with more different people, surround yourself with more different data sources, different media and otherwise, and that will be absolutely key as it relates to how to lead forward and get ahead of where you need to go.
Speaking of getting where you need to go, I'm always so interested in people who spend almost their entire careers at a single company, especially, I brought this up yesterday.
We did, yeah. We were speaking, of course, the former CEO of Dow.
Yeah, and he spent 32 years just like you did at Dow. But it's so hard to find somebody early on in their career, except for Katie, who spent their entire career at a single company.
Is that right,
Bloomberg,
Katie?
Yeah.
Katie was born here.
Born in this building. I don't actually leave.
Okay,
Yeah, I live here.
But you got a long way to go before 32 years.
Yeah,
a long way. I would have never embraced, right? I would have said, hey, my job is like my foremost thing. My job is necessary to have the life I want to live, as opposed to knowing what I wanted in my life and then having my job fit that. So I don't think it's a paradigm, Tim or Katie, that long-term loyalty. But what I think that puts, the pressure that puts on bigger leaders, is we have to lead differently. We have to evolve with the times, right? You can't count on institutional knowledge that is indigenous over the decades. And in fact, when you think about long-term planning from a strategic standpoint, can we really predict what's going to happen in 5 years?
Yeah.
Let alone 5, right? So fundamentally, the pace of everything has accelerated.
I'm so glad you brought up the hybrid point, because I do think that, I mean, you think about the effects of the pandemic, maybe some of the lasting changes is that hybrid structure. I mean, in my own life, I think about the time I still spend a lot of time at the office, but I used to be here, 8 to 6 p.m. every single day. And I don't do that anymore.
Yeah, but you're still getting those hours in.
Oh yeah, no, but I go home and I work. I have to be here every day because I'm on air. But and then a lot in my personal life, my friends. I have a lot of friends who move jobs for that hybrid flexibility. They're all millennials. But when you think about leaders today, I always wonder: is it sustainable? I mean, do you think that those Gen Zers will fall in line, or do you think that leadership at big companies today will have the desire to be flexible and meet them where they are?
Yeah, well, the very last chapter of my book is actually called Flexibility, right?
There you go.
So I fundamentally believe that flexibility is here to stay, right? I personally cannot stand the moniker of return to the office or back to the office. Has anybody ever actually found a way to go back to the past? No.
Doc in Back to the Future.
That's right. I actually was there with the DeLorean and everything, right?
You can do it.
That's
you think
not
88 miles an hour with the flux capacitor, you can pull it off.
The flux capacitor can do anything. Gigawatts, however many gigawatts it could possibly have. So, but on that note, right, what leaders have to do now, and nobody has been taught this, right, how to lead in this way. Nobody's been taught how to deal with a workforce that is geographically dispersed, a combination of different modalities, which could change every single day, who is in a work site versus who is not. So in my view, flexibility is here to stay. It's here to stay because we want, as leaders, access to the best talent possible. We want access to as diverse a customer base as possible. We want access to the most diverse, compelling investor base, right? And as every generation emerges, every generation becomes more and more diverse in terms of what their needs are, the clarity of their purpose. And it's incumbent upon us as leaders to figure out how to operate this way. But what I will say is that you have to now treat the office or presence with great intention. You cannot just assume that because people are present physically in the office, that they're more productive, that they're happier, that they're more engaged. And I think that's one of the fundamental differences, because, Katie, when it was 8 to 6, we were, right? Yeah. We were. When it was pre-COVID, we were all in the office. Engagement was a fact, because that's the only way we knew how to work. Sit tight, because we're going to do some news, and then we're going to come back more with Ann Chow. She's the author of the new book, Lead Bigger, The Transformative Power of Inclusion. She spent more than 30 years at AT&T. She's on 3 boards of publicly traded companies. That's next on Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up day for the S&P 500 index. Choppy session, but nonetheless, we had a gain of 24 points. S&P ending the Tuesday pre-debate at 54.95, up by about 0.5%. The Dow ahead of tomorrow morning's CPI report, down 92, brought there at 0.2%, while NASDAQ is up 141 points, up by 0.8%. 10-year 3.63%, with a 2-year 3.59%. Spot gold up 0.4%, 25.16 the ounce, and West Texas Intermediate crude oil down 3.9%, 66.39 for a barrel of WTI. Brent ended the session below $70 a barrel. Brent crude today down by 2.9%. Well, certainly we have got two major events coming up for markets. We've got the ABC News presidential debate tonight on Bloomberg Radio and the consumer price report tomorrow morning. So is one more important than the other? That question for Amanda Agati, CIO at PNC Asset Management, who is a guest right here on Bloomberg Business Week.
Well, I think CPI is certainly much more important than the debate tonight. I'm not sure that we're really going to get a lot of hard-hitting market intel that's necessarily going to drive markets forward here based on what we hear tonight. Obviously, policy differentials on either side of the aisle are going to matter going forward, but I don't think there's going to be enough clarity tonight to move markets materially.
All right, how about you be the judge? Our debate coverage kicks off at 8 p.m. Special edition of Balance of Power, the main event 9 o'clock right here on Bloomberg Radio. Oracle shares at a record today, up by 11.4%. After the close of trading, we did hear from Petco. That stock after hours up now by just about 2.6%. GameStop after earnings down by just about 1%. I'm Charlie Pellet. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And that is a Bloomberg Business Flash.
Thanks for that update, Charlie. Do appreciate it. I've got an important message for our listeners and viewers out there in San Francisco and the Bay Area. Starting October 1st, the place to listen to us in the Bay Area is on the Bloomberg Business app. It works seamlessly in your car with Apple CarPlay and Android Auto. Make the switch today because October 1st, Bloomberg Radio is streaming directly to your phone. It's the Bay Area's new home for Bloomberg Radio, the Bloomberg Business app. Download it for free in the Apple App Store or on Google Play. I want to get right back to Ann Chow. She's former CEO at AT&T Business. She spent more than 30 years at the company. She ultimately rose to become the CEO. She was the first woman and first woman of color CEO in the company's history. She's on boards of 3 publicly traded companies, and she's a senior fellow and adjunct professor at Northwestern's Kellogg School of Management. She's got a brand new book out. It's called Lead Bigger: The Transformative Power of Inclusion. So let's talk a little bit about that, because 4 years ago, we'd be sitting here having a completely different conversation about inclusion, DEI, the way people identify themselves and the way people bring themselves to work. Right. But just in the last few months, we've seen this huge shift. We got Ford coming out recently and saying, along with other companies, including Harley-Davidson, Lowe's, Tractor Supply, Deere, Brown-Forman, essentially pulling back from pledges to commit to diversity, equity, and inclusion. Many of them were made in the wake of the George Floyd murder, and many of these companies have been targeted online to sort of roll back these DEI initiatives. How do you view that as a leader?
So as a leader, I will tell you, Tim, that, and I appreciate the question, that I think DEI has largely been misunderstood. I personally don't like the acronym because it, in some circles, it means one thing when it's actually 3 different things. It's diversity, equity, and inclusion. My view of that is that diversity is just simply a reality of the modern world, right? Every generation that comes forward becomes more and more diverse. There are many different dimensions to diversity. Equity is just about fairness, and inclusion is the topic as to why I wrote the book, right? Inclusion means widening your perspective by including everyone that that is in your ecosystem, everyone, to have better performance and better impact. So where I think DEI is misunderstood is that it has, in some circles, been now interpreted as issues of representation based on gender and race alone at the cost of everything else, which is not at all what each of those words is, nor what inclusive leadership is about. And I'm sure that those companies, had reasons for making the decisions they did. I'm often asked advice on this topic from leaders across different businesses, and this is the advice that I give them, which is you have to start with understanding what the purpose of your business is, as well as what your value system is. You also have to be very, very clear about how performance is measured and who your stakeholders are. Not all stakeholders at any time are created equal. And one of your jobs as a leader is to mitigate and manage risk, right? And so, no doubt there are reasons for why those companies made those decisions. And I think that each of us as leaders has just got to be prepared for, as we serve a set of stakeholders, that we intentionally make sure that we message and care for the other stakeholders who may be impacted in those decisions.
And it's a pretty nuanced debate and pretty nuanced communications coming from different companies. So I want to clarify what Ford did recently. Jim Farley wrote in a note to employees that the external and legal environment related to political and social issues continues to evolve, and the company no longer will speak publicly on polarizing issues of the day.
Well, to that point, I mean, this conversation that we're currently having in society around DEI and this pullback that we're seeing from certain companies, it kind of reminds me about ESG, for example. I mean, there was a whole kerfuffle over ESG a couple of years ago, and you think about these three-letter acronyms. You could look at these different conversations and say it's inevitable that these sort of conversations become politicized, and it's hard for the C-suite to navigate around that. Do you think it's inevitable, this politicization?
I don't necessarily, right? In my view, leadership is a choice that we all make. Leadership has no gender, it has no age, it has no color, it has no politics, it has no religion, right? And leadership is all about rallying and aligning up a group of people to go get something done, to do work. That's what it has always been. I've never been a sort of political kind of person. I do think that acronyms are problematic, right? I mean, certainly I come from an industry where acronyms are all over the place. And while, I think we as humans also have this need to oversimplify things, right? And so, inclusion is so much more than just representation. It's about an environment that you create to widen your perspective, to look at new data sources, to surround yourself with different people, to advance your business, to innovate, to grow, right? To build a contemporary workforce that will compete not just today, but tomorrow. It's all of those things that make really just good business sense, right? And are gender and race included in that scope? Yes, but it's not just that.
Do you think companies should speak out on issues that are not related to their businesses?
I do not. I feel very strongly that companies and leaders need to stay focused on their purpose, on their values, and on their stakeholders, right? And how performance is being measured. And that doesn't mean that there aren't issues. If there are issues out there that are causing you, or that they directly go against your purpose and your values, then you are in fact compelled to, right? Because you're staying focused on that business purpose. I don't necessarily feel that leaders should feel compelled to wade into every step of waters. It's a very personal decision, I think, to do so. Each one of us are faced with that, right? Even though on social media profiles, it's always views are my own. When you're a leader of an organization, a team, a big company, your views are not just your own.
So how do you balance that with some of the contentious issues that are important to voters, for example, like, I don't know, different regulations around a woman's right to choose in different states? Like, how do you figure that out in a presidential election?
Yeah. So what I know I will be listening for tonight, is I will be listening for bigger leadership. I will be listening for leadership that focuses on individual rights, but also focuses on what is right for our country as it relates to policies and programs. And like I said, leadership has no politics, right? Leadership just is. I will also say that leadership is about leading all the people, not just the people who may agree with you. And I think that's what inclusive leadership is all about. So that's what I'm going to be listening for tonight.
And Chow, former CEO of AT&T Business. She's also the author of the new book, Lead Bigger, The Transformative Power of Inclusion. She joins us here in the Bloomberg Interactive Brokers studio. It is just before 5 o'clock on September 10th. And Katie, we saw the S&P 500 move higher by about half a percentage point today.
Yeah, of course, following through on a strong day yesterday, following a bruising week last week. September off to a very rocky start.
Coming up next, we're talking more when it comes to politics, but with small businesses. That's next on Business Week.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Katie Greifeld in for Carol Messer. I'm Tim Stenivek. Katie, what are you doing tonight at 8 o'clock?
I told you already, I'm taking magnesium, I'm taking my melatonin. I will, watch a little bit of our coverage. Of course, the debate doesn't start until 9 p.m., but we're going to have some great coverage on Bloomberg TV and radio. Kaylee Lines, Joe Matthew, David Gura. What an all-star lineup.
That was perfect.
Thanks.
It was a very enthusiastic promo.
Yeah, and the best part was that I'm being sincere. I am excited.
I'm going to be watching it on the Bloomberg Business apps.
As you should.
Hey, speaking of politics, Kamala Harris proposing a tenfold increase in the small business tax deduction for startup costs. It's a new weapon in her arsenal as she vies with Donald Trump to show voters who can best assuage their anxieties about the economy. Trump, for his part, has touted lowering the corporate tax rate to 15%, but what is a small business owner to do? What are they thinking? To get an understanding of how they're thinking about the election, we bring in Elizabeth Gore. She's president and CEO of the fintech platform Hello Alice. It's a fintech platform for small business owners. Elizabeth joins us from San Francisco. Elizabeth, help us understand the visibility that you have at Hello Alice into how small business owners are thinking about politics.
Well, howdy, y'all. I'll probably take melatonin too, so I'm with you. I get it. Look, at Hello Alice, we serve 1.5 million small business owners with credit, loans, and different access to capital. And we talk to them all the time about what they're thinking, what they're worried about. And look, 70% of them have not decided who they're voting for, and it's based off what they're going to hear about policies around taxes, inflation, immigration. However, 95% of them have said they are going to vote. And that is indicative of previous elections. Small business owners have a high propensity of voting. So this is a population that both candidates need to pay attention to.
And it's interesting, that, a significant portion have not yet decided who they're going to vote for, but they're definitely going to vote. I mean, that sort of raises the stakes on tonight's debate. What will small business owners be looking for in terms of topics that they want to hear about from Kamala Harris and Donald Trump?
Look, there are 33 million small businesses in this country. We have 5 times the amount opening than the history of our country. This is a really critical population. Number one thing they want to know is taxes, 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 taxes. And remember, it's not just federal. We're looking at state elections, local elections as well. The next is inflation. Cost of goods matters to these companies. Finally, we think about immigration in other terms, but hiring is a massive still ordeal post-COVID to small business owners. So how they feel immigration impacts that is going to be critical.
Interesting. Do you have you done any research on how these small business owners feel after a change at the top of the ticket?
It's interesting. The undecided was much higher, and now it's gone lower. So,
okay.
We don't know which way that is pushing, but it definitely was a change.
So before Biden dropped out, undecideds were about 25%?
Right.
And now
Isn't that wild?
What are undecideds now?
So we're at 30%.
Interesting.
So things have changed. And look, here's what's really important about that is they are really listening tonight of what are those policies. And you said corporate earlier. There is a big delineation between corporate and small business.
Yeah.
So that's what they're really listening to, those key words. The vast majority of jobs in this country are coming from businesses with less than 30 employees. So that's what I'm paying attention to and what our customers are paying attention to.
Yeah, it's a really nice reminder that, small businesses are the lifeblood of this economy. And I want to go back to the point you made about immigration, of course, that a lot of small business owners will be focused on immigration. And of course, we are fresh off the last month's jobs report, the August jobs report. There's been a lot of questions about the labor market. What view do you have into how small business owners are feeling about labor availability right now?
Yeah, well, on one hand, it's exciting because over 70% of them are hiring right now. So, that gets me excited that there is growth in the market. On the flip side, they are not finding the labor they need. We're still in these quote hiring wars in their own neighborhoods. And I'm talking about the folks that serve y'all every day, your coffee shops, your dry cleaners, your auto mechanics. They've got to have labor in order to do their jobs for you. So this is a major topic.
You are president and CEO of a business.
I am.
Have you decided who you're going to vote for?
I have, but I am always listening and pushing till the day of to make sure that both campaigns are going to understand the policies that they need to set forward.
Do you feel like they're understanding the policies that affect
I
these
think they're
small business
listening.
owners?
There's a difference between understanding and listening, right? There's been massive shifts at the SBA. There's been lawsuits and litigation around supplier diversity and supply chain. And so we have a lot to do. Capital is very expensive right now for small business owners. It is not accessible to everyone who needs it. I'm a big fan of U.S. veterans, and they're having a really hard time getting credit and loans right now. So there is a lot to talk about and a lot to do.
Elizabeth, really appreciate you taking the time and joining us on Bloomberg Business Week. Elizabeth Gore is president and CEO of the fintech platform for small business owners. Hello, Alice. Excuse me. She joins